Thank you very, very much, Edward. So this rally continues. I remember as soon as the employment number came out, the markets were kind of scratching their collective heads, started saying it's weak. Is that a bad thing? No, it's weak. That could be a good thing because the Federal Reserve jumps in, maybe lowers interest rates. What do our brainiacs think of that? Market watchers, of whom I have great respect. Jim LeCamp joining us here. We got Rebecca Walser, Small Business and Entrepreneurship Council President Karen Kerrigan. Karen, let me go to you first then on what the markets are interpreting from this, that the Federal Reserve cuts rates sooner rather than later. Do you agree with that?
I do a little bit, but also I do think the trade issue is weighing on this as well. There's been very encouraging news coming out of the Mexico and U.S. negotiations. Mexico government officials and the president have been conciliatory as opposed to retaliatory.
Right.
And I think that's very, very positive news for the markets, and then maybe breathe some life back into USMCA as well, which I think is very, very, very critical, obviously, for the U.S. economy and therefore the markets.
Yeah, it obviously got sidelined a little bit, and we are going to discuss the whole Mexican thing in just a second. Rebecca, I want to get your handle on all the groups that have benefited from this. I'm reminded of the fact that normally when the Federal Reserve starts cutting rates, not all the time, but most of the time, it's bad for the markets. In other words, what does the Fed see that we don't see? It was a phenomenon that came ahead of the big meltdown a little more than a decade ago, and the multiple periods we've seen where we've had cracks in the market, even before '87. I'm just wondering whether we are looking at a different environment here or just ignoring that reality.
Yeah, Neil, it's a great question. It is a kind of ironic that we get a weak jobs number and the market goes up. It's a little bit strange.
Right. And I think that's what they were toying with earlier on. Like, how should we feel about this?
Right, exactly. So this is what's happening is the investors are saying, all right, this is increasing the probability that the Fed is actually going to cut interest rates in even June now. And I think that's ridiculous. I don't think that's going to happen. I think the Fed is going to be...
Where did that come from? Because that was prior to this numbers release, obviously. Maybe it was built on the surprisingly weak ADP report, which still showed a gain of 27,000 jobs in the private sector. But I'd never heard prior to this Wall Street Journal report that it could come as soon as the end of this month.
I know. It's a little bit crazy that we would react that quickly, Neil, to numbers that are still, we have 7 million open available jobs for qualified people.
Wow.
So we have almost, in some cases, some people used to call this full employment, if we have that many open jobs and not filled. So yes, I think you're right. I think it did come from the ADP report on Wednesday and thinking that the Friday numbers would be bad. And then now that they came out and it's just like this reaction of, okay, this is going to price in a rate cut. And I don't know that the Fed is going to react that fast, Neil, because they can't undo it that fast. So I think they're going to be a little more measured than as fast as this month or next month. I hope they are.
Jim, I was talking to someone this morning on the employment report. It says, Neil, when push comes to shove, it's better to have jobs increasing than going the other way. And we are still in a position where over the last year or so, we've been averaging in excess of 151,000 new jobs each and every month. Over the last 3 months, in excess of 160,000 each and every month. So that trend is this economy's friend. What do you make of that?
Well, you're right, Neil. Good to see you. We have a 3.6% unemployment rate, so you can't expect explosive jobs numbers every month when you have a 3.6% unemployment rate and you have employers saying that I can't fill these jobs, but the jobs are there. And the investors are acting now like they've won a Powerball ticket. They're acting like Jerome Powell has come in and he said, I got your six, I got your back. And the reality is he has not said that. And if you look at other comments by Charles Evans and John Williams, you got to start tapping the brakes on this. The market's acting like we're already getting these cuts. In fact, if you look at the Fed funds futures, the odds for September cut are about 95%. And if you go out to December, it's about 99%, with the biggest odds being of 3/4 of a percentage point cut. I think that's very unlikely. The economy's really doing pretty well. It wouldn't surprise me to see no cuts at all.
Wow.
Now, that being said,
yeah,
and
right.
I think investors need to tap the brakes as a result, but that being said, the 10-year Treasury yield has come down. The market has pushed down other interest rates, and that should be good for stocks. I just think maybe we're getting a little ahead of ourselves here on the notion of the rate cuts.
You're right about that. You know, Karen hit the nail on the head earlier addressing the other thing that might be more behind this than we give it credit, and that is what's happening on the trade front, particularly with Mexico. I want to go to Jackie DeAngelis, who's following that very closely in these ongoing talks. Remember, if these tariffs go into effect, that'll certainly slow things down. That's the fear. What are you hearing, Jackie?
Good afternoon to you, Neil. Well, the latest from the White House is that the negotiations continue today after what was a very long week of talks. Mark Short, Chief of Staff to VP Pence, said this morning that he was very encouraged because the Mexican delegation came to the table and actually was open to some of the things that the U.S. was suggesting. He didn't say specifically what, but he did say that there was a long way to go still, and that was the bottom line. Also, the legal teams are going to be talking about this more today, so news certainly can come out of the White House as the meetings progress. But the president, the vice president yesterday, the press secretary, they all said tariffs will go into effect on Monday if Mexico does not step up to the plate and agree to some of the demands that the United States is making. Now, earlier today, the Mexican foreign secretary, he did stop to talk to reporters, and he said that he would circle back when negotiations were through. Also, Kevin Hassett, chairman of the Economic Council of Advisors, he said this. Take a listen.
And the president will be presented with a lot of facts when he lands today. And so I think this will be something that will be relatively quickly moving. And hopefully the border security issue, which is really the president's top priority, is resolved through these measures, and that the president agrees that they've accepted some terms that will work. But if he doesn't, then the tariffs will go into effect.
So that's the bottom line. If they don't, the tariffs will go into effect, Neil. Meantime, the Mexican foreign secretary has also said that Mexico will deploy its National Guard to the southern border to help enforcement. Of course, there's been some speculation that part of the conversation is about asylum issues. Those issues could take longer to resolve. So those 5% tariffs could go on Monday as this conversation continues, even though the talks over the weekend may not be public per se. Certainly the president will be mulling over the issue. Neil?
You know, the one thing I like, though, about Kevin Hassett, he's always smiling. So when he's smiling, he might be saying something very dire. But if you weren't playing with the sound up, you would just say, oh, okay, I can relax. But that's me. Great reporting as usual, Jackie. Let's go back to Karen Kerrigan on this, because, Karen, this is a big wild card for you. Now, let's say the tariffs still go into effect despite some of the progress we've been seeing. They would be, you know, the 5% tariffs. It might hold off the higher ones to come, maybe hold off the highest they could go by October, 25%. Sort of play that out for our economy.
Well, when you look at it from a business owner perspective, even the threat of tariffs, there has been reaction from many types of businesses across all industries, right? So they're looking at alternative supply chains, thinking how they might have to do things differently from an operational perspective. And when the president, the self-described tariff man, when he's threatened tariffs, he usually acts on that. So, the tariffs, right, even the threat of tariffs are having an impact on business right now. I think they're planning for more tariffs. They have to do that. I think given the history of the president and where he's gone on this issue. Now, I hope that's not the case. If we do have tariffs, 5% increase on Monday, then this quickly gets resolved. That would be really great for the economy, and it's very, very important that for USMCA and getting some momentum behind that so we can get passage. That, to me, is the most critical part of these negotiations, getting them settled so we can get to USMCA, get that. That's critically important for our economy, for businesses of all sides. That's going to help growth.
And this got in the way of that. I don't mean to cut time short here, but Rebecca, is it your sense that if this is resolved, it improves the possibility that we can resolve our differences with or is that just a separate issue?
I mean, I think China is its own dragon, to be honest. But
I see what you did there. Very, very good. Good.
I mean, I actually think that this president, he doesn't cease to amaze me. I think that it's very genius of him to say Mexico is the conduit through which a lot of money is flowing, billions of dollars a year to support illegal immigration, and this is a way to get them to be held accountable. So, it's going to get resolved. I think Mexico is acting completely different than China, and thank God they are.
You know, Jim, I'm wondering, these companies that have prepared for this, even when it hasn't come to fruition, obviously, they stack their store shelves only so much, but they tend to prepare for a storm, and they've been battening down the hatches a little bit here, and that might be reflected, by the way, in the latest employment stats. What do you think?
Oh, it absolutely has an impact. If you look at what happened last year with the Chinese tariffs before they kicked in, you saw a lot of orders that jumped the gun on the tariffs, and then you had a vacuum after that. And I think now you're seeing a lot of uncertainty, not only still with China, but with Mexico. And remember, this Mexico thing only came up 2 Fridays ago, so or last Friday. So it's still fresh news, and business owners haven't had that much of an opportunity to respond. But they are still worried about the Chinese tariffs. So it all adds up. I think Mexico probably gets solved fairly quickly. I think a lot of Wall Street is saying, on the other hand, let's fight one battle at a time, one front at a time. Didn't we learn anything from the lessons of history and the history of world wars? One battle at a time. And so I think Wall Street would be very welcoming of a deal in Mexico, but it won't trump China. China is still going to be a very important deal here.
Thank you very much. Final word on all of this. We'll still follow that, still follow a Dow 268 points, still follow up on a number of Dow issues that have just hit all-time highs, including Microsoft and McDonald's. McDonald's at an all-time high. You're welcome, Golden Arches. I couldn't do this alone.